You thought buying a home would be freedom. But what if I told you your mortgage is a trap? Not a personal failure, a financial design built to extract as much from you as possible without you ever noticing. This isn't conspiracy, it's policy. And whether you rent or own, this affects you. Because the UK housing market isn't just broken, it's being rigged, without your consent. Welcome to Brits Analyst. Owning a home used to mean you made it. It was the milestone, the investment, the shield against rising rent and uncertainty. But in 2025, that dream has become something else entirely. A liability dressed up as security. Since 2021, the average mortgage repayment in the UK has increased by £370 per month. According to UK Finance, that's £4,400 a year wiped out from household budgets. And the reason? It's not just inflation, it's the interest rates. Engineered pain. From the Bank of England to curb inflation, even if it breaks the back of the middle class. According to the Bank of England, over 1.6 million UK homeowners will see their fixed-rate deals expire in 2025. That means millions will be pushed from 2% interest rates to 5.5% or more. For a £200,000 loan, that's an increase from £850 to over £1,300 per month. That difference, it doesn't go to the home, it goes to the lender. And while homeowners bleed cash, banks are making record profits. Lloyds and Barclays posted multi-billion-pound gains in net interest income. The margin between what they charge borrowers and pay savers. Your pain is their profit. Meet Ellie and Jovid. They bought their first home in Swindon in 2019. 3-bed semi, £245,000, 10% deposit, fixed mortgage at 1.9%. In 2024, their deal ended. Their new rate? 5.4%. Monthly payment jump? £410. Ellie is a part-time nurse. Javed works in logistics. They've cut childcare, sold their second car, delayed all travel, and still, they're slipping behind. They didn't overborrow. They didn't miss payments. They just renewed their mortgage. Here's where it gets systemic. The UK government has quietly relied on high home ownership to reduce public pressure on housing and welfare services. But instead of regulating banks or building affordable homes, they've allowed a credit-fueled housing system where borrowers are constantly remortgaging to survive. Mortgage debt in the UK is now over £1.6 trillion, nearly as large as our entire GDP. And who holds that debt? Not the state, not the public, but private lenders and global investors. Who trade these mortgage bundles like assets? Your home is someone else's revenue stream. So what happens next? What happens when 3 million households are forced to remortgage at double the cost? When renters are priced out and buyers are locked in? When wages stay flat but banks keep taking more? That's what we explore next. Because what's happening with mortgages in the UK is not just a cost of living crisis, it's a form of engineered economic control, and it's time we made it visible. Your mortgage feels personal, a deal between you and the bank. But once you sign, that loan doesn't stay with your bank. It's sold, sliced, packaged, resold. You become part of a mortgage-backed security, a bundle of thousands of loans sold to investors across the globe. The product isn't the house, it's you. Your predictable monthly payment, multiplied by millions, is now generating cash flow for pension funds, hedge funds, even foreign banks. And you never agreed to any of it. Here's how it works. You take out a mortgage, your lender sells it to an investment group. They bundle it with thousands of others. That bundle is sold as a safe income stream. If you default, the investor still makes money through insurance and swaps. If you pay on time, they profit from your reliability. Either way, they win. This isn't illegal, it's not hidden, it's simply not explained. And it turns your mortgage from a family asset into someone else's financial instrument. Now let's talk about the people who can't escape. They're called mortgage prisoners. Over 195,000 households in the UK, according to the FCA, are stuck with inactive lenders. Companies that don't offer new deals and charge rates far above average. Why? Because their loans were sold off during the financial crisis. They can't remortgage even if they've never missed a payment. They're forced to pay 6, 7, even 8% rates, while others are on 4. They're trapped, and the government has failed repeatedly to offer a way out. Martin Lewis, founder of Money Saving Expert, called it the most ignored financial scandal in modern British history. Take Lorraine. She's 58, lives in Derby, and took a Northern Rock mortgage in 2007. After the crash, her mortgage was sold to a private equity firm. That firm doesn't offer new deals. Her rate, 6.4%. Lorraine's tried refinancing 6 times. Rejected every time, because of criteria the new lenders imposed. She's paid every month for 16 years. But now, she pays £420 more a month than she would on a regular loan. Her income hasn't changed. Her house hasn't changed. But the owner of her debt has, over and over again. So who profits from this? Banks collect interest, investors collect yield, and the government avoids building affordable homes because the system keeps people locked into paying. Meanwhile, the Bank of England continues raising base rates, claiming it's the only way to fight inflation. But inflation is falling, mortgage rates are still high, and banks haven't passed on those rates to savers. The result? A silent wealth transfer, from working homeowners to financial institutions. This isn't just about money, it's about power. Because if you can't move, if you can't refinance, if you're stuck in a system you never agreed to, that's not just financial control, that's economic capture. In the final chapter, we'll uncover how this mortgage rigging is changing British society and what you can do to escape it. Stay tuned. You'd think with mortgage pain rising, rents skyrocketing, and young families priced out, there'd be no spare homes left in Britain. But according to the Office for National Statistics, there are over 676,000 empty homes in the UK, and 1 in 7 of them sits in London, where housing need is highest. These homes aren't derelict. Many are luxury flats, bought by overseas investors, left empty, not lived in, not rented. Why? Because to them, London real estate isn't shelter, it's a vault. In 2024 alone, the number of long-term empty homes in England rose by over 5%. That's more than 250,000 properties sitting unused for over 6 months. Meanwhile, over 100,000 UK households are stuck in temporary accommodation. Hotels, overflow housing, council queues stretching 7 years long. That's not scarcity, that's allocation failure, by design. Now here's the twist. At the same time, private landlords are exiting the market in record numbers. According to data from Hamptons and Zoopla, over 84,000 landlords sold up in the last year alone. Why? Rising interest rates, new tax rules, tighter tenant laws. Margins vanished. So they left. But this doesn't help renters. It helps corporate landlords who buy entire blocks and raise rents across the board. Tenants lose choice, costs go up, and competition shrinks. And while millions fight for a place to live, one landowner expands their empire quietly. The Crown Estate. That's right, property owned by the British monarch. They control over 360,000 acres across the UK, including massive pieces of central London. And in 2024, the King's Estate reclaimed multiple buildings in Kensington and Mayfair. Some were residential, others were just land. But all of it was pulled back into Crown control. Dance. No coverage, no uproar, because royal property operates under different rules, different laws, different reality. And that's the point. In a time when teachers, nurses, and drivers can't afford a flat near work, the monarchy is growing its uninhabited real estate footprint. So let's connect the dots. Empty homes, unaffordable mortgages, soaring rents, landlords fleeing, and the monarchy acquiring more land without living in it. This isn't poor policy. It's a modern form of feudalism, hidden in spreadsheets and planning law. So what can you do? Start by tracking your mortgage. Use remortgaging tools before rates spike. Don't believe the myth that owning is always safer. Push your MP for empty home taxes. Vote with housing in mind, even if you already own, because this is about more than equity. It's about access, mobility, freedom. Your home should be yours, not a bank's asset, not a royal inheritance, not a leveraged liability. So what does breaking free even mean? When the housing system feels like it's designed to lock you in, here's the truth. You won't out-budget this. You won't out-earn it. You won't escape it alone. But knowledge changes everything, because once you understand the architecture of financial control, you begin to see the cracks, and the cracks are where resistance begins. Let's start here. If you feel stuck in housing, if you feel behind, broken, or like you failed, it's not you. It's the structure. For 2 decades, Britain's economy has rewarded asset holders, not income earners. According to the Resolution Foundation, UK housing wealth has grown 4 times faster than earned wages since 2000. So if you're a renter or a first-time buyer scraping deposits, and you feel like you're chasing something that keeps running faster, that's because you are. This was not designed to be a fair race, but breaking free isn't always about escaping the system. It's about knowing how to navigate it and reshape it. Here's what that looks like in real terms. If you're renting, start demanding transparency on build-to-rent deals. Join or form local housing unions. There are rent strike collectives gaining traction in London and Manchester. If you're a homeowner, use mortgage tracking tools to track remortgage deals ahead of time. Don't wait for the bank to call you, act first. If you're in shared ownership, learn your exit rights. Many are discovering unfair maintenance clauses or restrictions on resale. Join support forums and legal advice groups. If you're a first-time buyer, be cautious of 95% mortgages. They sound easy until rates rise and equity collapses. Don't just look at the price. Calculate the total cost of ownership over 5 years. Now look at Glasgow. In 2023, a group of tenants formed a rent union after repeated hikes from a corporate landlord. They negotiated collectively and froze rents for 2 years. They weren't rich, they weren't powerful, they were just informed and united. Change doesn't always start in Westminster. Sometimes it starts in a group chat. So maybe it's time we abandon the old British dream. Not because owning a home is bad, but because the version we were sold was never built for this economy. Maybe the new dream is this: secure housing that doesn't exploit you, transparent policies that don't confuse you, a future that doesn't punish you for starting late. Ownership should be earned through work, not inheritance. Renting should be safe, not predatory, and mortgages should be pathways, not prisons. So what now? You've seen how it works. You've felt the squeeze. You've heard the stories. But what you do next could be the beginning of something bigger, because once enough people see the system for what it is, they stop playing the game. They change the rules. And if this opened your eyes, share it. Send it to someone trying to buy, trying to rent, trying to breathe. Subscribe to Brits Analyst. Next week, we reveal how student debt has become Britain's new financial trap. Don't just survive the system. Understand it, break it, rebuild it. This is Brits Analyst.